Good evening, everyone, and welcome to the Brian Crombie Radio Hour. I've got a very interesting entrepreneur, a serial entrepreneur, to introduce you tonight, and a fascinating new technology that he's going to be launching as a company in the coming months. Our guest tonight is Patrick Armstrong. He is the CEO and founder of Hyyve Canada, which is a real estate marketplace that's going to allow you to sell your listing. Sounds fascinating. Patrick, welcome to the show. So, Patrick, can you tell me a little bit about Hyyve?
Sure. So Hyyve is a first to market real estate platform that connects home sellers with qualified agents. And what makes a difference is that we allow home sellers to seek bids from agents that are looking to represent them in the sales process. So what the bid looks like is it's a financial component. So there's an upfront payment in order to secure the listing. But then more importantly is a comprehensive sales plan on how the agent is going to sell your property. So how are they going to maximize your value? What's the listing agreement terms? What sales engine do they bring to it? What marketing engine? Do they have a buyer existing in their portfolio that is looking to buy in that neighborhood? So what that does is it creates sort of more choice for the home owner, the home seller, and more choice of agents to look at. But also it makes it, because it's a competitive environment, the agents have to really put their best foot forward. So they're really putting the best proposal they can put together for your listing so that you maximize your ROI on your house, not only on the sales side, but also on the upfront side of the listing itself.
Sounds like it's pretty radical, because the vast majority of people just hire their friend or their uncle or their brother-in-law or something like that to sell their house.
That's right. So most homeowners currently use referrals, and we're not saying that referrals are bad. We're saying we're just a second source. So you can go to your referral, see what they offer, but then you could also come to Hyyve and get qualified agents to present their full listing bid for you. So then you get sort of the best of both worlds, and then you decide what the best plan is. Our thinking is that a referral is not always the best for agent for your house. So we're presenting a system that allows you to select the best agent. So from reviews, from transactions, from anything that they've had with RICO, so the authorities. But then, what are they offering to sell your place? What is the whole package look like? And that's what Hyyve allows you to choose from.
You're going to have to get a lot of agents on your marketplace. Are you going to be able to do that?
Yeah, so currently we're getting about a dozen a day that are registering. So we soft launched in December. And so we have several hundred agents now that are on our platform willing to go. We also have a seller wait list, which is also growing as well. So these are sellers that are looking to sell their home in the spring when we launch. So we're launching in April to catch the high time of the real estate in the spring. So yeah, we've got both sides covered. But more importantly, to signal to agents that we are a tool, we have a very strong advisory board from industry leaders. That includes Howard Drukarsh, who's the founder of Right at Home Realty. So that's the largest independent brokerage in Canada. We also have the former president of RE/MAX Canada that joined our board. So earlier this week, he had stepped down from RE/MAX on the 3rd and joined our board on the 4th. So these two, industry leaders are helping us drive this platform to make sure it's a tool for agents to maximize their ROI on listings. So currently, agents, what they do is they spend a bunch of money marketing on low conversion leads, on park benches, traditional advertising that converts really low, and it also has a very low ROI. With our platform, they get to put the money directly for the listing. So if they win the listing, they get that business. So that's their ability to go forward and earn their commission. If they don't get the bid and they don't win, they get their money back. So they haven't lost anything.
So one of the things they could do is just lower the commission. In the United States, there was a big class action lawsuit, wasn't there, where they forced away fixed commissions and allowed competitive bidding for commissions. Is that exist in Canada?
Yeah, I mean, agents do negotiate their commissions out, but what we're saying is that the real value here is the listing, right? So without the listing, there's no sale, there's no commission, there's no marketing, there's no listing it on the MLS. So what we're saying is because nothing can happen without that listing, and there's an intrinsic value to the listing itself. So we feel that the listing has monetary value and that the homeowner should be compensated for that. It also makes the agent have skin in the game, right? So they're not getting the listing for free and then asking you to sign a listing agreement and the home seller sort of waiting for the home to sell. we know in this model that the agent has an invested interest in selling it. So they're going to work hard at selling your listing because they've now invested in it. And so that's supported by some of the surveys we've read from the Canadian Real Estate Association, for example, that have the most of the Canadians are saying that they feel that agents are really out there to work for the commission only, not necessarily for them. And so that's because there's no skin in the game up front. So the agent's out trying to get listings and hopes to sell something to make commission. In our case, they really have to believe in your listing, in your price, and your value of your home to really take on that business. So you're getting people that are super motivated to sell your place.
Sounds like it's a fantastic innovation. Let's give a sense of the economics that you think might happen. So let's say that the typical average home is $1 million. It's not, it's less than $1 million, but let's say it's $1 million. What would be the average commission? About 5%?
Well, that would be their commission. So we don't play in the commission part, so the industry standard is 2.5% selling agent, 2.5% buying agent, right? So 5% total. That's sort of the standard. That's not where we're playing. So we don't touch the commissions. We're playing what we'll call pre-listing. So upfront, right? So the agent knows roughly what they're going to sell the place for. They know how much they're going to earn selling the place. So how much are they willing to purchase this listing?
Okay, so given those numbers, let's say so 10% would be 100,000, 5% would be 50,000, and 2.5% would be 25,000. So of a $25,000 potential commission, what do you think they're going to pay for the listing?
Well, we can't tell you in Canada, but I can give you data from the US. So we have a competitor in the United States that does this. They claim $5,800 on average for a bid. So a $5,800 average bid. Now they're operating on the West Coast of the US, where the home average sale price is a little bit lower than Toronto, where we're launching. So we're anticipating that we will probably not in the beginning get to 5,800, but I think that over time, as the agents do compete, they will drive the price up, and will probably be very similar to 5,800 upfront for your house to earn the right to sell it.
So about 22% of the ultimate commission.
Something like that. Yeah. I think that's where we'll end up.
That's interesting. I'm told that, and I don't know if these statistics are right, but that something like 80% of all commissions are earned by 20% of the agents. So that, there's a whole bunch, call it 80% of the agents out there that don't make a lot of money. Is this going to change that?
Well, I think for the home seller, what we're going to be getting here is, top agents, because there is a factor here that you need to bankroll this thing. So if you're not a performing agent, or you're not doing this full time, obviously you're not going to have the cash flow to go out and do it this way. So you're correct that it's the 80-20 rule, like similar to any other business. So if we look at who's going to be bidding and who's registering, a lot of the agents that we have registering now are seasoned. So, 15, 20, 25 years. We've even seen some 35-year experience registering on our platform. So I think that what that does is it gives the homeowner really top-notch agents, and then we give all the information to the homeowner to make sure they make the right decision. So again, back to reviews, any issues they have with RICO, the regulatory board, their past performance, and so forth. So I think we're just going to get the top agents. It's just really and that's what we want to give our sellers too, is top agents, right? This isn't just frivolous. This is get good agents.
Are there other models for, what you're trying to do, where people are paying up front for the access to your business?
Not in Canada for real estate, just in the US. So we're the first to market here.
But, you've got sort of similar kind of industries, like a financial advisor or a mortgage broker or whatever. Are there other industries where people pay up front to access your listing, your business?
Well, every business, if you think about it, is like this, right? So every business has a cost of goods sold and has revenue. So real estate agents have been lucky that cost of goods sold, which is the second line on your income statement, is zero until they actually go out and sell it and then they get a commission. So what we're saying is, listen, there's always a cost of goods sold. So this is what this is. You're buying the asset, you're buying the product, which is the listing, to go out and make your revenue. So it's just a traditional business. So it's not really radical. It's just different for real estate.
You see, I've been frustrated that I think that because of that zero cost of goods sold, and the way that the commission structure works, that often there's sort of incorrect and opposite incentives between the seller and the agent. Time value of money as one example. If an agent thinks he can get another 50,000 in price, but it's going to take 6 months to get it, someone that's thinking about net present value or money earlier than later would really want that agent to work hard to get it done more quickly. But if the agent's just making absolute dollars, they're gonna, and they haven't invested something other than their time, so they don't really have the typical desire to realize money earlier than later. They're not as motivated to sell it quickly. They're more motivated to get that extra little bit because they got 2.5% of it.
That's right. But also in our model, you're going to fall back onto the listing agreement. So as part of the bid, there is a listing agreement that gets executed, which in Canada is Form 200. And in there's a timeline. So there's going to be, so any home seller who picks an agent is going to know up front, here's the timeline that they're requesting in my listing agreement, whether it's 6 months or 3 months or whatever. So we're not changing that either. So what we're doing is just, we're going to use that contract as our guiding light for the term of the listing agreement. And then that also regulates what the agent has to do and what the home seller has to do. So, home seller has to allow for showings, agent has to do showings or what have you. Whatever's in that contract will be sort of mandated because it's executed through Hyyve once they've accepted a bid. So we don't, even though an agent might be wanting to sell it for more and take longer, they're going to have to decide that up front. So if they want to do that,
$55,000 on the line, and it's got an interest clock associated with it, you're going to be more motivated to sell it more quickly.
Absolutely. And you're bound by the outside of the date of the listing agreement. So
let me ask you about another question that's always frustrated me: is staging costs. If you think about an agent has an opportunity to spend $50,000 on staging, and it comes out of the vendor's pocket, they're going to get 2.5% of that incremental value based on the staging. But if it's only equal to the dollars that you've invested, the vendor's out the $50,000 and is out another 2.5% of it on the commission and hasn't got any benefit. And so therefore, it's almost worth the agent convincing the vendor to spend any kind of money that they possibly can convince on staging, even if it doesn't frankly get dollar for dollar increase. And I always thought that the staging cost should be the agent's responsibility, because then they'd be really motivated to make sure that they're going to get value for money.
Yeah. So that's also come up in our conversations. So we do. So again, back to how we're doing this is it's a bidding environment. So an agent, that may be a perk. They might say, hey, as part of my $5,000 bid for your listing, and my 3-month listing agreement, I'm going to throw in painting and staging. So everybody needs to be more competitive in our marketplace because it's a free marketplace, right? So if you just go to a referral, there is no competition. So they know traditionally that's like, it's in the bag. You don't need to do much. It's a referral. So we're saying is, hey, go for your referral and then come to us, and the agents in our platform are really going to sharpen their pencils. And they might say, hey, you know what? We have a staging company. It's free. Or we have a painting contract company, it's included. I mean, that's part of the perks that they might get to sweeten their bid for your business. And, they have all the numbers. So it's transparent for everybody. The agent knows what we're going to try to list it for. They know what their commission could be, so they know what they can do. And, so it may be a lower margin deal, but you'll get more deals because we're giving you access to direct listings. So if you purchase a listing, it's a motivated seller. That's the holy grail. You go make your commission. So you might have to sweeten your pot. You might lower your margin, but you'll increase your volume with us.
You said that one of the things you're going to be looking for is people that have got potential interested buyers in the area. I've heard that sort of, what do you call it, double-ended contracts are really unfavorable to the vendor. Tell me how you think about that.
Yeah, so we do have an option in our platform to do a BRA, which is a buyer's representation agreement, and that would be part and parcel of their bid. So if an agent comes in with a strong listing bid price, then you can assume that they're going to have also a longer listing agreement, but they also might say, hey, I also want a BRA so I can get the commission on the other side. So then it's up to the homeowner. They can decide if they want or not. So it's a free marketplace, right? So if you think that the agent is really qualified, they've given you enough money up front, and this particular agent also requires a BRA, and you're okay with that, then it's a free market. You can do as you choose.
I got to tell you, I think this is a fantastic innovation because I've been frustrated that I think that, real estate brokers, agents have been making really good commissions. And unlike almost any other segment of industry, people in that sort of a middleman, situation have had competition, and technology has really, benefited that competition, whether it be travel agents or frankly, wealth management, or a whole bunch of other sectors of society have had good technology that's come in and made people more efficient, more effective, and brought commissions down, but not the real estate business. So I think it's a great technology. We're going to take a break for a message and be back with Patrick Armstrong in just 2 minutes. This man has really been a serial entrepreneur, invested in and created and brought to market a couple of different companies. So that's an interesting part of this conversation as well. Stay with us, everyone. Back in 2 minutes on the Brian Crombie Radio Hour. Welcome back, everyone, to the Brian Crombie Radio Hour. We're chatting with Patrick Armstrong, who's launching a really interesting new platform for vendors of houses to put their opportunity up on this marketplace and have different real estate agents compete for their listing. When are you going to launch, Patrick?
The plan is to launch mid-April in time for the spring listing season. We'll have what we'll call an MVP plus, so a minimum viable product, but the plus being that it's not that minimum. And then that'll improve over time as we get feedback from the market. The strategic partnerships, which we're adding to this, which include everything around the listing. So as part of our service, we're going to improve the entire real estate journey with other partners. So, for example, we've partnered with BidMe. They do home renovations, a home renovation marketplace. So it's very similar to Hyyve, but for home renovations. So a home seller would presumably want their house to be freshened up, maybe a little paint job, whatever. They can do that through Hyyve as well. We've partnered with Frank Mortgages, which are also a customer-focused mortgage company, brokerage company. So they can also do the financing for their new home through Hyyve as well. And we're also talking to other companies that do legal closings. So you'll be able to do the closings online and home inspections and anything around sort of the home selling process. So that'll come online. The what we're calling the home seller marketplace will come online in Q2 2025.
So you've got, MLS, you've got realtor.ca. How are you going to interact with those platforms, if at all?
Well, we're before them. So what we're, to be clear, we're a pre-listing and not a listing. So listing is what ends up on the MLS. So everything we do is before that. So they will then, once an agent is awarded the listing or the bid, they will presumably go and put it on the MLS as they traditionally do. So we're not actually changing anything downstream. We're just before you sell your house, before you list your house, that's where we play. So we're marketing your listing ahead of actually a listing. So we'll call it a pre-listing. So we don't need to interact with the other ones, and we're not competitors to them either. They just fall in line after our process.
I got pitched by a company called Noble that was trying to do something similar. Are you familiar with that company?
I've heard some of it, yes, but not intrinsically familiar, no.
Okay, so you don't know how you're different or better than them?
I'm pretty sure they're just a listing platform as opposed to a bidding platform. So I think that they're not the same business model as ours. They're more like a Zillow type service.
Okay. When are you going to launch? You said in April, and then how are you going to launch? Like, how do I find out about you and give you a try?
Well, we're online now. So if you're a seller looking to sell, you can join our wait list, and we'll let you know when we're live. Joining our wait list also gives you some discounts. So we'll lower our success fees by 20%. So the way we get paid is that we get a commission of the bid. Anybody who registers now early will get 20% off of our fees. There's never a fee for a home seller, so the home seller doesn't pay anything to us. They have no obligation to use us. If they, even if they go out and get a bunch of bids, they have no obligation to select a bid. It's information, and if you want to go forward, then that's when we're compensated, and if not, then you can leave our platform. So,
And the website is what?
Hyyve.ca, which is HYYVE.ca. You'll also see us, a lot of media is lined up for April. So you'll see us in Toronto Life and Stories, CBC and stuff like that. So we'll get out to the market that way. But currently we're accepting agent registrations. Again, no obligation to register as an agent. And home seller waitlist. Again, no obligation there either. And so far so good. We're growing both sides of our marketplace, and we'll be ready to transact in April.
Sounds like it's a fascinating opportunity. You've launched numerous different companies. You're the chief executive officer of Hyyve, but in the past, you've been a founder, director, and co-chairman of, what is it, Snail Inc.
Snaily, yeah.
Snaily, and then before that, Strong Ventures, and before that, Armstrong Holdings, and before that, Threat 4, and before that, Xcore Inc., and before that, Comtrex Communications. My gosh, are you like one of these serial entrepreneurs?
That's what I've been called, yes. So I have founded 7 or 8 companies. Most of them ended up in an exit. Most recently was Snaily, which is a prop tech in Canada, was the largest smart locker company in Canada. We exited in August. So I'm familiar with the prop tech space, which is why Hyyve is easy and familiar for me. Even though it's a slightly different market, we're going after residential as opposed to commercial, but it's still a prop tech space. So yes, I've done this several times, and this one is a new venture where we've put a solid team together with a bunch of strong advisors from the industry, and we'll make a go of it.
Sounds like the technology must be pretty daunting. Who are your software people?
We do everything in-house, always have and always will, so that we own the IP. So we have seasoned developers that build our products that have always been around for me in the past.
And you're launching in Toronto, but with plans to expand to other cities in Canada?
Yeah, so we start in Toronto to make sure that we really understand the market and how everything converts. And Toronto's big. It's got, last year had 166,000 listings. So if we can get some of those,
166,000 listings. I'm told that the inventory is the highest it's ever been right now. Is that true?
Yeah. So, I mean, the market's soft, but it's all in perspective here. Like, even if the market's soft, there's still a bunch of listings going on, right? So even if you look, all the way back to through the pandemic and all that stuff, I mean, you never saw less than 450,000 in Canada or something like that. So market's enormous. For our model to work, we don't need a huge amount of listings. It's a low fixed cost business, and all the capital's been put into software up front. So, I mean, even if the market's soft, you're still talking about several thousand a month in Toronto, and we just need a little small piece of that, and we'll get the early adopters and grow from there. Step 2 is national, so we'll be launching a financing round in Q2. You'll see that in the news too, and that will be to supercharge our marketing and be able to really scale nationally to capitalize on this first to market, to make sure that we're out there and fast.
So you're going to go to the market to raise money in the fall. How have you been funding your operation so far?
My holding company's been funding everything. So we'll fund it all the way through till proof of concept and traction and software done, so that, it doesn't scare any investors away. The thing's working, it's proved out. And now it's just a question of scaling it. So we'll fund it till we're ready to scale.
What's the reaction from the brokers? Are they scared that you're going to hurt their economics because you're going to take that $5,000 away that they're going to have to be spending up front, and they're still going to be only getting the 2,500, 2.5% fee? Or are they excited that they can now compete for the opportunity?
Yeah. I mean, listen, there's always a percentage of the market that's going to be naysayers. So I'm going to say that, maybe 10, 15% of agents we've talked to are, don't like it. But when you start talking about it and understanding the economics, it starts to resonate with everybody. And so the ROI and conversion of what they're doing now is very low. Like, we touched on it earlier, like park bench advertising, mailers, door hangers, cold calls, like what have you, traditional advertising. All of that is sub 2% conversion and very hard to get an ROI out of it. In our case, we're going to call it like, it's nearly 100% conversion and nearly 100% ROI, because if you get that bid, you now paying for it, and now you're going to go sell the listing. And if you sell that house, you get your money. So there's a direct relationship. And if you don't win the bid, then you're not spending any money. So you're spending zero. So that's unheard of in advertising, right?
So just remind us, what's the website we should go to if we want to check you out?
Hyyve.ca, which is HYYVE.ca.
Patrick Armstrong, thank you so much for joining us and telling us about Hyyve. It sounds like an interesting technological improvement, and I look forward to listing my house on it. Appreciate it.
Well, thanks, Brian, for your time, and thanks for the opportunity.
That's our show for tonight, everybody. Thank you for joining. I remind you, I'm on every Monday through Friday at 6 p.m. on 960 AM. You can stream me online at saga960am.ca. All my podcasts and videos go up on my website, briancrombie.com, social media, YouTube channel, etc. as soon as the radio show goes to air. You know what? I think that it's fascinating that technology has really changed and made more efficient and more productive almost every sector of society, and it is continuing to do so. Real estate is one of those areas that I think MLS, Realtor.ca, et cetera, have been very helpful for people looking for homes. And now this is going to make it easier for people selling homes and maybe more efficient, more effective, and get it out of that, situation where, all those people are calling on those friendships to try to force you to list with them, and you don't know whether they're actually the best agents for you. And so I think that this makes a ton of sense and is an interesting technological improvement. So let's check it out and see what happens. Good night, everybody.